assez atypique, hein, puisque tu as été légionnaire, entre autres, enseignant chercheur à l'EM Grenoble, et puis maintenant tu es consultant chez You. Et donc, si tu peux juste passer les slides. On aura 4 keynotes ce matin, une table ronde animée par David. Vous avez un hashtag ORESME21, donc n'hésitez pas à tweeter toute la matinée, à prendre des photos. On va pouvoir le mettre sur le fil Twitter. Et puis les règles du jeu, donc 25 minutes, plus des questions derrière. Donc je te laisse commencer.
Merci. Je vois qu'il y a même un timer.
Un timer, voilà.
Oui, mais ça c'est pour des amateurs, je n'ai pas besoin de ça. Donc d'abord je voulais commencer par dire à David, félicitations. C'est très très rare qu'on trouve quelqu'un qui est capable de vulgariser le concept de blockchain. Et je pense que qu'est-ce que tu as fait tout à l'heure, c'était vraiment très bien fait. Deuxièmement, je veux dire qu'à partir de maintenant, je vais commencer en anglais. Parce que le concept de blockchain et monetary policy est assez complexe d'expliquer en anglais. Donc si je vais essayer d'expliquer ça en français, c'est au-delà de mes compétences. Okay? Donc, I hope that's not a problem. If in any case you have a question, don't hesitate to ask me in English. So, my talk is not going to be about the applications of blockchain. Most of the people who are going to be speaking after me are going to be talking about where blockchain can be used, or Bitcoin, what kind of form can it take, how is it going to be used in different kinds of ways. I'm more of a researcher rather than a technical person. So what I try to do is come up with what can we do with this in terms of implications. And I think that's a lot more important from a perspective of actually giving us direction. Because if you don't really know what we can do in terms of leveraging this technology, then there's no real horizon towards which we can aim. So that's what I'm going to try and do today. And that's what the topic of my talk is. Hello, blockchain. This is monetary policy. This is blockchain speaking. So we can start off with a bit of a timeline as to what's been going on. 2008, you had Satoshi Nakamoto who released his white paper. 2009, the code came out. From 2010 all the way up to 2012, blockchain was relatively in a very technical circle. Most of the people who used it were a different breed of people, you could say. And then all of a sudden, towards 2012, we had the Silk Road incident starting to take place. And all of a sudden, there was a lot of media coverage. People realized that there is an alternative financial system which doesn't really require us to depend on the current banking system. And that's what piqued a lot of interest for people like me. So towards the end of 2012, when I first found out about it, and because I personally have always had questions about the fractional banking system, I said, oh, here's an alternative. Why don't we investigate it a little bit more and see what we can do with it? So you had the early adopters who started getting interested in blockchain and Bitcoin at the same time as well. And 2014, you had people like Andreessen Horowitz, who came up and put a lot of money inside the blockchain universe. And once that happened, you had other VCs coming in as well. We go on to 2015, and your slide is out of date. 921 million in October 2015, yes, but by November 2015, it had actually gone over $1 billion. So this was when I like to call it the Wall Street entered the blockchain universe, because they started putting huge amounts of money along with the VCs. And that's what we saw. We saw that a large number of banks were getting into partnerships with startups who are working within this space. And then today you have the R3, which has got 42 banks. So it's a very dynamic kind of an area today. And since this period right now, since the beginning of 2016 till March, the kind of attention that's been given to blockchain has started to come down a bit. The hype is starting to come down a bit. But it's still got a very interesting kind of effect, because what essentially this partnership with R3 means is a change in the mindset of the banks. Banks till today have functioned in very siloed kinds of units. But now what they're realizing is if they want to turn around and actually use this technology in a different kind of a way, they have to start thinking in terms of decentralized systems. And the moment you start thinking in terms of decentralized systems, you can't use the same kind of rules as you've used before. Your structures actually collapse to a certain extent. And what the R3 partnership is trying to do is two things. First, they're trying to figure out what are the standards and the protocols that they need to use so that all banks can work between themselves. You need to have a new kind of an infrastructure for it. And secondly, at the same time, there's still there's competition between them. They're trying to invent different kinds of financial products which will allow them to leverage the blockchain technology. So it's a double kind of an approach. And although this is very interesting and something that is much needed in the financial system today, I think a more important question that needs to be asked is, what are the governments doing in this case? And that's where my talk is going to be focused on. More and more governments are starting to think about how they can use the blockchain. I know this for a fact, even in France, because on the 18th of this month, there is a réunion at the Assemblée Nationale. And my boss is actually going to be present, and he's going to be over there as well. And this is what they're talking about. They're trying to figure out how they can use the blockchain. They're not the first people to think about it. The UK is well ahead. Singapore and Hong Kong are pretty close by as well. And they're doing different kinds of things, and I'll get to that a bit later on during my presentation. But it's very important to understand that what this allows us to do is it gives a chance for the government to start thinking about a new kind of infrastructure tool that is based on the blockchain. And that's very important because of the simple fact that if you have something that can be operated on the blockchain, there are possibilities, and I will get into that in a bit, of having different forms of ways of implementation of monetary policy. Essentially what you're seeing is a method or a possibility of having a more inclusive financial system, which is a malaise that we have today with the current economic system. And hence, if we do that, effectively, it changes the role of the bank, and we come back full circle to what is going to be a new version of the fractional banking system. That's essentially my hypothesis. Now, I know it's a rather bold hypothesis, but at the same time, as any good researcher, I look at what's going on outside the world and try and figure out and make connections between the dots. And what I'm going to try and do right now is essentially show you this kind of panorama in which we're having different technological evolutions in different sectors of finance. Blockchain is just one of them, a very important one nonetheless. And essentially, if you collate all of them, you have a certain convergence of technology. And that offers a different kinds of possibility in terms of redefining what the fractional banking system is all about. So I'm going to move on to the dwindling importance of banks. Now, banks have actually been under attack from different directions thanks to technology. The main competition for banks today isn't other banks. It's technology firms. And this is happening in different sectors of finance. So we can start with just the simple lending and remittances. And this is an example that you had started off with, in which you can see there's new players that are coming in today, which are not traditional financial firms. These are firms which have been created, which offer different kinds of services because the traditional banking system does not really allow a lot of possibilities. So the first slide that you see up over there, that's something that I got from the World Economic Forum. And essentially in that little graph that you can see, you find out what's actually happening. There is a large population of people who don't get served today because of the fact that they have a different concept of finance and they want to take different kinds of risks. But the alternative lending platforms that we're seeing on the rise today are able to do that. Some of the examples which are cited over here really magnify what are these possibilities. For example, Cabbage allows you to do a 6-minute loan. Doesn't use the regular credit rating kind of system. You log on to Cabbage, you turn around and give your information about your company. It tracks down all your UPS data, your eBay data, how many sales you're making. It sparses all the information about your company. And once it's done that, it turns around and tells you, you can now get a loan for X amount of money. The limit is up to around $100,000. And essentially it does this in 6 minutes. No bank seems to be doing that. Lending Invest shows how banks are actually reacting to it. It's another peer-to-peer lending platform. Banks are now becoming the lenders because they realize that they can't do it through their own systems. So rather than doing that, they've just joined the bandwagon. Credit Tech is another company that does something similar to that. I just put that slide over there because I love what they say on the website of Credit Tech. You go to Credit Tech's website, it says, banking is important, banks are not. And a lot of it is mostly targeted towards the whole startup entrepreneurial kind of ecosystem. It's like one entrepreneur helping another entrepreneur to a certain extent. Best example of that is C2FO. This company, what it does is, if you're a small business, then if you don't get your invoice paid, say from a big client, it can be a matter of life and death for your business. What these guys turn around and do is find a third party who's willing to pay for you immediately, and then 45 days later, when your client actually does pay you, they turn around and give the money back, and of course they charge you a fee for something like this. But essentially, because they can immediately make capital available for the startup, they're helping generate the progression of a startup and the growth aspect of it. This is something similar that's done by TransferWise. Anyone heard about TransferWise? Remittances. They essentially do the same thing. If I'm in India and I want to send money to France, and there's another person in France who wants to send money to India, rather than doing the usual Western Union kind of transfer, what TransferWise turns around and does is, it finds a person who's in India who needs the same amount of money that he's getting from France, and he diverts it over there. And the same thing is done with the people who are in France. So you reduce the exchange risk. They have third-party interventions this way, and essentially what they're doing is they're democratizing the concept of finance. You don't have to go through the regular channels anymore, and you can do it at different layers. There's a fragmentation that's happening, which is allowing a more granular aspect of finance to come out. Okay? And where does the blockchain fit in all of this? Well, that's the last company, moneycircles.com. Essentially does the same thing, peer-to-peer lending. Connects savers to borrowers, uses a smart contract for execution of the contract. So we're seeing this kind of convergence happening with technology. It's not just the lending and payment markets. This is a lot of what's going on today in capital markets. With the blockchain, what people are trying to experiment with, and this is what a lot of banks are currently working on, is essentially how can you do something as simple as a bond trade. Traditional bond trade has two counterparties who turn around and say that, okay, fine, we're going to sell some bonds and exchange it. Then there's a long process that is involved. Banks get connected, then the custodians have to be informed. The custodians exchange information. Finally, the trade gets executed, and they use, a system like DVP or SWIFT. All of this takes a lot of time because each person who's involved in the transaction has to be updated about the transaction. There are a lot of costs that are in place because of the regulation. That's why you have the T+3 kind of delay when you do this. Alternatively, what people are now trying to figure out is, can we do it directly on a digital issuance via the blockchain, in which you have the accounts, you have the money that's already inside over there, and essentially the transaction happens a lot faster because once it's on the blockchain, execution can happen with the aid of a smart contract. When the conditions of the smart contract are fulfilled, the contract executes, the blockchain gets updated, and every person who's involved gets real-time updates as well. A big area which is another part which banks are working on right now is trying to figure out how they can attack the payment situation. The payment sector is something that's been undergoing a lot of change as well. Essentially what's been happening in the payments industry is that credit cards and debit cards cost a lot of money, especially for merchants. Every time someone uses a credit card, there's a huge amount of fees that's required. That's the reason why if you go to a shop, they ask you for a minimum when you use your card. Google Pay turned around and changed that equation, Apple Pay and Google Wallet. And what they were able to do was they were able to bifurcate a lot of the credit cards. But at the same time, they started cutting out the competition. And now one possibility, and this comes from a report that was done by the World Economic Forum, is what happens if we move to a blockchain kind of a system. In that case, the whole value exchange process changes because now you can connect a client directly to a merchant. The merchant and the client's bank accounts exist on the same ledger. Transaction happens a lot faster. And thanks to big data and data analytics and IoT, the merchant now has a lot better connection in terms of customers, knowing the customer, and he can offer payment solutions directly through that without requiring an intermediary like Apple Pay or Google Wallets. So I'm not going to get into insurance because there's people over here who are a lot more qualified than me. And I think that's the subject of the panel a bit later on. But insurance industry, just because of its size, is obviously going to be something that's very, very impactful. And if I just think about autonomous cars in the future, along with autonomous contracts, smart contracts, you can just start thinking about the numbers that are involved. But I'm sure people more qualified than me will be talking about that in a bit. A lot of this innovation that we've been talking about was essentially happening in different parts of the world, mostly the US and the UK, but now we're seeing it happen in France. This is an infographic that was released very recently by LTP, I think around 2 days back. And you can see the whole kind of distribution that's going on over here. In different sectors, you're having more and more startups that are coming in. And what this actually represents, and this is the whole, the basis for my hypothesis, is it's allowing for the creation of a much more fragmented ecosystem, a much more fragmented commercial banking system. And this has implications in terms of the fractional banking system that we have. The defragmentation will lead to a change in the fractional banking system. That's essentially the crux of what I'm trying to say. You might be thinking, well, what is the reason for this? Why would anyone actually want to be bothered about this? Well, the problem is today, with the current system that we have in terms of fractional banking, we incur an excessive amount of debt. And this debt is a big problem. Before we get into debt, I just wanted to highlight something in terms of why this fragmentation is actually happening. And I call it the 2x2 step hypothesis. That's actually supposed to be a GIF. So there was actually a guy doing a 4-step over there, but we can't see it right now because it's a PDF. But essentially what you have, and this has been happening ever since the crisis, is that a lot of governments turned around and said that in order to boost the economy, we should give more chances to entrepreneurs. And so a lot of the people who got fired from the banking system after the crisis, they knew the problems of the banking system. And what they did was they leveraged technology to attack those problems because they knew it better than anyone else. The second level was actually data. Big data became something that could be used. It was no longer just people tweeting around, you could now analyze it. So the data analytics side of it started making more and more sense. And this two started working in tandem to create what you could call a two-level IT system. When I call it a two-level IT system, it's because when you look at IT systems today in most big infrastructures like over here, you have one layer which is connected with the customer, which is very, very rapid, which is something that really captures a lot of what's going on with the customer. Are they clicking there? What is their churn rate? All of that stuff. And then on the second half, you've got what you would call the legacy system. The legacy system of IT is essentially what does the main work, the heavy lifting, the transactions, the validations, all of that stuff. The problem with the legacy system to today has been it's very old. It's been built over years. It's been regulated. It's been tested. But because of this, it's become a layered kind of a cake. And it's become a bit more like a spaghetti system right now because it's so complex. What the blockchain is offering is a solution to that underlying structure. And that changes the equation. Quite simply because when we look at the first layer of IT, the stuff that's related to customers, we saw the amount of people who are jumping in, the competitors. You saw it in the last slide, in this little infographic. That's just the first layer of IT. Already dwindling the entire population, dwindling the importance of the existing incumbents. Imagine what happens when we get more and more outside players changing the underlying structure. We get more competition, more fragmentation. And that's essentially what's happening. This is an infographic that got released today morning at 4:30. I changed my slides. I was very happy to do that. But essentially, it highlights the point that I'm trying to make. You can see all of these companies, they're all big banks or networks or payment systems connected to people, startups. And if you look at the previous one, you can already see that a lot of these startups are taking over the market share of the banks. Essentially, what I'm trying to say is the role of the bank is changing. And if the role of the bank is changing, then what does that mean for fractional banking? So this brings me back to the famous question of debt. Countries today suffer from huge amounts of debt. And this is a very big problem. In the fractional banking system, debt is essentially the way that commercial banks create money, credit, and purchasing power. And they do this, the money power, purchasing power that they create is something that didn't exist before by the creation of debt. Now, debt by itself is not something that's bad. We need debt actually to a certain extent. If you want to buy a house and you don't have the money, well, guess what? You take debt, you take a loan, you take a mortgage. If you need to buy a car, you do the same thing. But the problem is, if you don't have controls in terms of the amount of debt that these commercial banks are creating, then they can create unlimited amounts of debt. So you need to be able to control excessive debt creation. And this is very simply shown right over here. From the 1950s to 2007, private sector debt in terms of national income has gone from 50% to 170%. This is not something that happened overnight. This is something that has happened gradually. You can trace it back all the way to the 1970s actually, when the oil embargo came on. And you had countries like the UK, the whole Reagan-Thatcherism era, had a liberalization of finance. And because of that, you had more and more banks turning out and giving more and more loans. And that's essentially where the banks started taking off in another direction. As a result of all of this debt, this excessive debt, what has happened? Banks became too big to fail. We had the crisis, and now we're in a recession, a lot of which a lot of countries are still not actually coming out of it properly. So it's this excessive debt that is the main problem. And that's the point I wanted to highlight. Okay? People might be thinking, why do we have this? Or how did this happen? Well, a lot of it is actually based on those two famous theories, efficient market hypothesis and the rational expectations theory. According to this, even if you have financial complexity in the financial system, it doesn't really matter, because that will lead to better price discovery, better allocation of resources. And this was something that a lot of people believed in. They believed in it so much that they turned around and said that if we're going to make macroeconomic policy, we don't even need to look at the financial system. The financial system is like some kind of a filter. And then if you turn around and control interest rates and inflation, that's it. You can manage the economy. Financial system will do what it has to do in order to get better resources, a better allocation of prices, etc., etc. The complexity doesn't matter. And this was even done, this was said by people like Alan Greenspan. But 2007, we realized that, well, this is not actually what's going on. What had happened was because of excessive debt that was being created, more and more bad loans were created. We had an increase in shadow banking, banks dealing between themselves, creating innovative products like CDOs and credit default swaps. And finally, what you had was, because of all these bad loans, the cost of land went up. Always, whenever you have a crisis, it's always happens after the price of land goes up, followed by the crisis, so because the bubble burst, followed by a recession. And this is something that happens repeatedly. It's something that you can call the dance of debt. Because what happens is, debt from the corporate side essentially moves to the public side. When you have these increasing house prices created by excessive debt that is given into the economy, essentially what's happening is you're preparing yourself for the crisis. Now the crisis happens, and what do the government do? They turn around and do stuff like quantitative easing, etc., etc. And once they put that money inside over there, that doesn't mean that people are going to react. Because guess what? People are not really that rational. The whole rational hypothesis which we base our economic system on doesn't seem to work in the same way as it should in theory. People are not that elastic. Even if you turn around and give them QE, they're not going to turn around and say, oh, now that we got money, let's get into it. They're going to be much more reserved. And that's why you have this form of economic pollution, you could say, to a certain extent. That's something which was said by Lord Adair Turner recently. He called that economic pollution, the debt overhang. And essentially what happens is, even though you're providing money, people are not spending enough. People don't spend enough, they don't hire enough people, unemployment payments from the government start going up. And even though the debt might be coming down, as it has over here, from 140% to 100%, it starts increasing in the public sector. The result, fiscal deficit. And since 2008, almost all major economies, you could say all major economies, have followed the same path. It's like Japan offered us a use case study, and we are repeating it now. We didn't learn from our lesson. So essentially, this brings me to the main part of what I wanted to propose as a solution. We have all these problems today with the existing financial system and monetary policy, obviously. How can blockchain play a role? Well, it can play a role, and people are already thinking about it, just in terms of dilution of the fractional banking system. But that's already happening, and I've addressed it. You can have better transparency and better execution of regulation. And this is essentially what the UK is doing. I think the UK in October 2015 invested £10 million just in order to find out how they can do that. So they have the Financial Conduct Authority, the FCA, is actually working on this right now. But on the long term, there are much more better possibilities. What I propose is, why don't we start thinking about making a blockchain? But that is made by the central government, a sovereign blockchain, a base blockchain. And on this base blockchain, you can have all these little private blockchains that are being made right now by these R3 partnerships. What it effectively allows you to do through this connection, and this is how sidechains actually work, through this connection, you have better financial inclusion. You now know exactly what's going on with the public sector and the private sector. Because of this mismatch that we had before, in which the private sector debt wasn't even taken into consideration, we saw the results of what happened. What we need is a mechanism that allows us to make it more inclusive. And that's what this can offer us. A lot of the people in monetary policy, the macroeconomists, are not looking at blockchain possibly in this direction. But that's why I'm trying to use this opportunity over here to propose that. I think it's a very good thought experiment. Of course, there'll be a lot of technical and regulatory policies and issues which will come across along the way, but this is something that is very, very long term. This is something that will happen over maybe 3, 5, 6, 7 years before it gets into full deployment. In terms of the long-term possibilities, something which I'd like to talk about is a new form of fractional banking. Because if you have the current system in which the role of the bank is getting less and less important, it also gives the central bank a more important role in terms of deciding how to control the economy. And this is something which can be thought about in terms of fiat money. And I'll be talking about it in the next slide. Fiat money and helicopter drops, something which has been controversial for a very long time, but a lot of people are thinking about it today. Now, for something like this to work, you obviously need a protocol which allows for this mega blockchain to function and communicate with everyone else. The funny part is, someone's already working on it. The same people who made Ripple. This is a comment that was made in January 2016. It was on Wired magazine, the Interledger protocol. What they're trying to do is make a universal protocol. Just like HTTP. What's the difference between HTTP and blockchain? If you're on a web page which has got a hyperlink, you click on it, it takes you to another one. You can't do that with the blockchain today, because it doesn't work that way. The functioning isn't the same. Essentially, you can do that with HTTP because HTTP speaks HTTP. If you use an interledger protocol, you're effectively trying to recreate the same thing again, but from a value transfer network point of view. It's a very different kind of an imagination. But what it allows you to do is now start thinking about monetary policy from a very, very different perspective. You no longer have to just think about controlling the economy through interest rates and inflation. Those are there, those are tools, you can do it. But now you can start thinking about doing different things. If you just start using a blockchain and all your money is actually existing on that, you effectively created a cashless system. And if you've created a cashless system, then you can even put negative interest rates, something that you can't do today. Today, if you try to put negative interest rates, what do people do? They take the money out, they take it out in cash. Your policy just went down. Doesn't really work. This is an alternative towards that, and it's just one of the alternatives. Recently mentioned by Andy Haldane, the chief economist of the Bank of England. The blockchain can allow us having a completely cashless system, and there's much more advantages for that, just from terms of transparency, corruption, control, etc., etc. Fiat money and helicopter drops is another possibility that we can have if we have this kind of a system. Helicopter drops was actually something that was proposed by Minsky a long time back in the 60s, I think, in which he said if we want to turn around and actually remove the problem of income inequality, then we can essentially, the government can create money, not the commercial banks. The government creates money, fiat money, and just distributes it directly to the population. And the universal basic income, I'm sure a lot of you know that, is something that France is thinking about right now. The Netherlands are thinking about it. The Dutch have already used it actually in the past. And I think it's also the Swedes and the Finns. Now essentially, if you have this kind of a system, you can do that. You can deploy the money. And you can trace it, you can see exactly what's going on. Comes back to that whole financial inclusion thing. That's why it makes sense, in my perspective, for central banks to start thinking about creating a blockchain like that. And this isn't a new idea, it's an old idea, but being repeated recently by a lot of people who are much more qualified than me. And if you want to get a really good idea about it, I would highly recommend Adair Turner's book called Between Debt and the Devil, in which he gets into this subject in a lot of detail. It's an excellent read. So that brings me to pretty much the end of my presentation. As I said, this is just a hypothesis. This is something that I'm researching right now. But it's something that I think should be spoken to with the right audiences. Are there going to be complications? Of course. You can't use the same kind of methodologies as we've used today. And taking the information out of the blockchain and using it is its own technical challenge. The tools that we have today to do data analysis, they don't function that way. So you've got to build new stuff. But more importantly, what it does is allows us to start thinking about economics from a completely different perspective. We'll start needing to think economics not just in terms of supply curves and demand curves, but more in terms of, say, network theory and data science. And to do that, you need a whole new branch of thinking. Complexity economics actually offers that. Complexity economics is a branch of complexity science, which is essentially made to understand how particles explode. When they explode, how do you trace them? Because there's so much randomness that's inside. An economy is never in equilibrium. The efficient market hypothesis has actually based its whole theory on that the economy is in equilibrium, one agent does something like this, another agent does something else to get it back into equilibrium. That never happens. We're humans, we don't function that way. That's why you need a completely different way of thinking about the economy. In my perspective, complexity economics is a way to do that. I don't want to get into it because I need another half an hour to talk about that. And there will be new challenges as well. In this kind of an infrastructure, who's going to be the miners? Are they going to be democratically elected? There's a number of issues that have to be addressed. But I think it is something that we all need to be thinking about very, very seriously. Because if we continue with the same version of fractional banking, then there's a very high chance that we're going to be starting a conversation with the next generation by beginning with an apology. So that's pretty much it for me. Thank you.
Alors, pour ceux que ça intéresse, Kari est aussi speaker sur les TEDx, donc sur YouTube, vous pouvez le retrouver. Il a co-rédigé un livre blanc il n'y a pas longtemps sur la blockchain qui est très intéressant, que je vous conseille aussi de lire. C'est très frustrant, mais on va prendre une seule question parce qu'on a un peu de retard sur le programme. Par contre, Kari pourra être disponible après pour d'autres questions en off. Donc je ne sais pas s'il y a des questions dans la salle.
That's because I'm so good, right?
Alors s'il n'y a pas de questions...
N'hésitez pas si vous avez des questions plus tard. Je suis là.
Exactement. Merci Kari pour la prestation.